and using the contract, which was a very watertight contract, have taken specific directive from the Sindh High Court to SNGPL to continue supply of gas to us, and that sort of helps support our position as such. Okay, moving on to the next point, which is our financing strategy. And the issue which came was basically the buzz of the financial sector about our ability to service our debt, etc., etc. Just to understand the numbers, if you look at Engro Corp on a consolidated basis, this year our EBITDA we use as our operating cash flows. The cash we generate from the business, which can be used for debt servicing and dividends, etc., is going to be somewhere between 29 and 31 billion this year. Versus that, our debt servicing for the current year is about 20 billion, which includes about net principal repayment of about 7 billion, including the net loans taken, and of interest payment of about 13 billion or so. So we feel we have adequate coverage to easily repay all our existing debt servicing obligations. For foods which needed money to grow and for expansion, we did an IPO, and that way they have managed their own expansion plan. They raised 1.8 billion through an IPO. At the corp level, we're planning that we will be doing further IPOs. Some could be a direct sale, which the money goes to corp, or some could be IPOs where the money remains in the company, like what we plan to do with fertilizer. That will add another 2.5 to 3 billion rupees in coming into on the whole conglomerate as such. We expect our financial ratios to further improve. We have an in-principle approval from IFC that they had an existing $30 million loan at fertilizer, which in principle they will agreed to convert to equity, which will further improve our debt equity ratios as such. And obviously, debt servicing will go down in the future years when the loans become due. In 2012, if I look, just give you the same numbers, EBITDA and debt servicing, the EBITDA will increase to 38 to 40 because all our businesses are growing, especially foods, fertilizer, when you have full year of operations, etc. They will grow by almost 10 billion. While our debt servicing is almost the same, while principal is going up, our interest number is going down. So, in addition to meeting all our obligations, we are also bringing down the absolute level of debt as well. So, automatically interest charges going forward will reduce, as well as obviously the leverage ratios as such. A couple of points on Engro Rupiah, which we have launched the second issue recently. The Rupiah was always part of our plans, and we wanted to develop the retail debt market because we felt that if you look at other countries, including India, it is a very regular feature for large corporates to go out and borrow money directly from the retail market. The TSC concept initially was supposed to be like that, but eventually ended up with a few selected institutional investors. And therefore we felt there was a need to go out directly to the retail individual investor. And we managed that successfully last year. We raised 4 million rupees at a cost which was almost equal to our bank borrowing, and this year it will be even lower. Whereas it gave the retail investor a choice to improve his yield as such. As you can see from the bar chart, it's the highest yielding instrument as of right among equivalents. In fact, we were acknowledged for the first issue by the CFA Association, which gave it the award of the transaction of the year for the first issue we did last year. And just to give some comfort to the investors of Rupiah, if you look at Engro Corp as an entity, even after this issue is totally subscribed, the total outstanding debt of Engro Corp alone will be 7 billion, 4 plus the current issue. And its market cap, or what we say is the value of the securities it owns, is 64 billion as reflected from the market cap as such. So there is an adequate debt equity coverage for any redemptions or anything like that which we may face on Rupia itself. Thank you. Happy to take questions. Vasant is also here. You can answer any questions you may have.
Assalamu alaikum. I'm Junaid Iqbal, Head PM in Financial Services. Thank you very much for the very informative presentation. The purpose of today's event, of course, is to clearly bring out and discuss some of the concerns that investors may have had, and at the same time celebrate the successes that Engro has demonstrated over the years and continues to do so. So while we're already through with the first Engro Rupia certificate, currently we're offering the second Rupia certificate. And while people continue to remain impressed with Engro's growth and its innovation and its entry to different businesses, three questions, key questions pop up, which I'll just share with all of you. And in the meanwhile, we also have mics which we'll pass around and have the audience give out questions. I do, however, request that keep your questions short and do please introduce yourselves. The key themes, Asad Saab and Rohit Saab, that have emerged again and again are, is Engro growing too rapidly? And the second one is, how will Engro manage the gas issue? And obviously this is not an issue that you were aware of when you put up the nearly $1 billion investment. And the contract with the government is airtight, it's as airtight as it gets. And the third question is, how will you manage the debt, which I think is quite adequately covered. To begin with, Saab, just a general question, is Engro growing too quickly?
It's interesting that you say that, because when I was growing up, people used to say the same thing about me, that he's growing too fast. So let's just say I've heard this before.
How do we measure if a company is growing?
Get it closer than this. It's not me, it's who teaches us. So how will we determine, right? It's a judgment call. You obviously cannot have a metric that says, okay, 40% growth is okay, but 42 is not. So let's just apply our mind to it and say, how does one do it? When we embarked on the expansion program that we had, we were trying to grow in multiple businesses at the same time. And we were, some of these businesses were new to us. So the challenge was to that extent a bit greater than if you were growing in businesses that you were already accustomed to. So the obvious two questions would be, would you be able to get the people to resource these expansion programs? Will you be able to put in the management systems which ensure they effectively execute their programs? And will you be able to find the financial resources to manage to invest in that? So the last one first, very obviously, we were able to find the financing for $1.77 billion of investments. We did the financial close because there were three of the major investments were being, the financing for that was being put together at about the same time. So we had to raise something close to $1.3 to $1.4 billion in a span of about 6 months. Within 6 months we had financial close. So the markets, not just in Pakistan, but financial investors, both debt and equity, around the world, and that confidence of putting money in. And from the Middle East, from Far East, from Europe, from North America, we had investments which came in both in the shape of debt and equity. In terms of managing, we were able to draw people in each of these businesses from the best of class in that particular business. For example, in the food company, we had people who were coming in from Coke, Nestle, Pepsi, Unilever, and you name it, Procter & Gamble, the absolute US companies, we were able to draw people from there. We had people from the likes of AES coming in, joining the power generation business, Upco, etc. So we were able to draw those people in. Were we able to execute effectively? In 3 years and 10 months, we had hugely liquid market leadership, competing against a global giant and a Pakistani company that had been around for 25 years with a very, very strong brand equity. Those who launched that business at about the same time, 4 came in, 3 went bankrupt. 1 is a very, very successful, but a very, very small niche player, but a very successful player, I would expect. The market leader is effectively going into bankruptcy. So the absolute success, if you can measure that, both absolute and relative terms, you get an idea of the effectiveness of the execution. The power generation company was the only one of the gas-fired IPPs which came in under the 2002 policy, which not only did not go into delays and penalties, but actually started 3 months ahead of schedule. Lowest cost in terms of the capital cost, lowest operating cost, lowest tariff. And also, by the way, in terms of innovation, using energy which was just being fed into the air, absolute waste. And Pakistan is getting 220 megawatts from that. The fertilizer projects, you look at any project of its size in Pakistan, which is not an EPC project, anything even remotely, there's no project of that size, anything remotely close to that, and you will see the execution was more effective in terms of on cost and within time, because there's a little bit of a delay that we got. Compare that to any other comparable project in Pakistan or any other project in the fertilizer industry being executed worldwide. EPC contracts being executed in brownfield sites like Capco and Sapco running into significant delays. This was the most effective execution of any fertilizer project around the world that was going on at that point in time. So the proof is in the pudding. So obviously the human resource we were able to draw in, obviously we were able to put in the management system, we execute it effectively, we were able to get the financing for it, and therefore I would tend to say, no, we're not growing too fast. We are growing fast, and frankly we're not even growing as fast as people say we are. It's just because the Pakistani market has slowed down dramatically, so that in comparison it seems like we're growing very fast. Trust me, what we have achieved is nothing unique. Companies, there are probably 500 companies in China which are growing faster than this. Okay? So it's all relative. So the bottom line is, financially, from a human resource point of view, there is no reason to believe we get ourselves audited from the best firms in the world. We haven't had any of these top class auditors come in and saying your financial control systems are starting to break down. In the environmental area, we get recognized more often than we have ever done in the past. On the financial side, we just told you Best Investor Relations Award. So we've been able to keep pace with the increased investor base that we have and still have a good enough relationship to every year win the best in class in investor relations. Rupiah, most innovative transaction of the year. That's all.
Thank you very much for the introductory remarks. We have a very wide spectrum of investors, and also we've got a lot of past history from Engro with us here today. We've got Zafar Khan Sahab, who's the former CEO of Engro. We also have Shahrukh, whose father was the gentleman, Shahrukh Mirza Sahab, who led the employee-led buyout and did one of the most innovative transactions in the country. We've got heads of family houses, people from DFIs, heads of insurance companies, asset management companies, analysts, brokers, and you name it, accounting firms. So without further ado, I'd like to open the floor for questions. We've got 2 mics, so whoever would like to start, please do state your name, and it'll be great if you keep your questions short and concise. Right up here, Zafar Khan Sahab. Ready.
I think we got a good exposition on the debt side, but my question precisely would be, how much of the debt is foreign currency denominated, And let's just hypothetically assume that the rupee hits 120 or 150 in the next year. What does it do to your debt servicing and the directional numbers you should have? Thank you.
Rohit, sir, would you like to take it?
Our total
foreign currency debt is approximately 40-50 million dollars. But
fixed
some of the debt has natural expenses.
example with the power
Is
Bata takes care of the foreign exchange losses. Then in foreign
we have a natural hedge.
we have a natural hedge because we are pricing PVC in equivalent dollars. Similarly, in fertilizer, we hedge outright part of the debt. So I would imagine that the unhedged portion would be maybe approximately 150 million out of the total 450 or so.
Just to follow up, how much does your financing, I mean, is that a more